Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the third report of this year, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got soybean meal on top of our list with a 26% change in commercials positions. We've got 22% change in large speculators. You can see this change being much greater than average. It is actually, I would say it's the largest change in the past 52 weeks range. So it's a huge change that may push prices lower the beginning of this week. If we open a 5 years chart, you can see that we've been more or less in between the two extremes, the bullish and the bearish one, and now we're headed towards bearish extreme levels. Of course, we're not surprised after seeing such rise in prices right now. Of course, this doesn't mean that we have reached that extreme level. You can see that there's still some space left to reach those all-time or close to all-time extreme levels. But we're getting closer and closer towards those levels, and as we do so, we should be more careful with any trades on the long side of the market. Let's move on and have a look at feeder cattle, where we have a 24% change in commercials positions. You can see that change over here, with which basically commercials have gone below the zero line, meaning they are currently net short about this market. This is again a large change, again a bearish one that could affect prices in the near term. Opening a 5 years chart, here you go, you can see that we're getting very, very close to bearish extreme levels. The last time we were at such levels was back over here in 2015, and you can see that basically coincided with a top in the market. Now, of course, on this 5 years chart, you can see prices are low. But if you would scale in, you can see that there has been a significant rally, at least in percentage terms. There was one. And who knows, maybe this is going to be a turning point and we may see the continuation of this decline that's been the case since mid-2014. Our next market is lumber. We have a 15% change over there in commercials positions. Both commercials and large speculators are net short at the moment, so it's basically only small speculators who are taking the long side of the market. In net terms, basically that could mean that they're the most optimistic about the market. That, of course, in itself may be considered a bearish signal, but we have to open a 5 years chart and see everything in a real perspective. You can see that a bullish extreme was the case back over here in 2015. It marked well the end of this decline. Since then, we saw a rise in prices. The extreme right now is more or less in between the bullish and the bearish extreme. So I wouldn't say that the extreme situation right now is really helpful. I would say it's only the change signal this week that I think we can act on. Let's move on and have a look at large speculators COT Extreme. We have got crude oil and the S&P 400 with all-time COT extremes and large speculators positions on top of our list. Let's start with crude oil. Here we go. You can see that this all-time COT extreme and large speculators it can be viewed over here, and you can see not long ago we had such an extreme, a very similar size COT extreme back in mid-2014, and that marked well the end of that rally. That was a top from where prices have gone much lower, and we haven't seen those price levels for quite some time. So the big question is this going to happen again? It's hard to tell. These all-time COT extremes may be in the market for many, many weeks or even months before we see a reaction. But nevertheless, if you look at the chart, there has been a significant rally. We have reached a level where, technically speaking, we can say that it's a resistance level, for example. And if so, then of course anybody who's considering trading to the downside, then this COT report in itself is definitely supporting that direction. Our next market, the S&P 400, where again we have an all-time COT Extreme. And jumping to this 5-year chart, everything becomes more visible. So this extreme is present right now. You can see that the S&P 400 was actually staying at these levels for many months now, since basically the middle of last year. And you can see there wasn't any serious change in the trend. So again, you can see indexes going higher and higher. They're on their uptrend right now. So you have to look at other indexes as well and see whether there's anything supporting this picture, at least from the COT perspective side, and then decide if you want to act on it or not. Our next market and the last one for this review is the Kansas City wheat, where we have 145 report extreme in large speculators. There's an even greater 170 report extreme in commercials positions. So you can see that basically means that the last time we had such an extreme, in case of large speculators, that was back over here. I'm just pinpointing that to you, the beginning of 2014. In case of large speculators, that was the end of 2013. But both cases are actually showing you tops in the market. So again, very interesting to see a market looking like that, a huge decline for many years, and then getting to a point where we actually have a COT bearish extreme. But if you scale in, again, you can see that there has been a rally, a rise in prices, and this could be a top, and we could see even lower prices coming in this market. So that's the Kansas City wheat. Of course, you have to look at the Chicago wheat, and since the strong correlation between these markets, obviously, and then you have to decide whether you're going to act on this COT signal or not. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great week. Take care. Goodbye.